Invest Africa, proudly brought to you by KPMG.
Hello and welcome to Investor Africa. I'm Demisho Greater. Africa's oil and gas industry continues to attract global investment, and this is despite the challenges, including a sharp downturn in crude prices over the last year. The 22nd Africa Oil Week recently took place in Cape Town, South Africa, and it brought together decision makers within the global oil and gas sector. CNBC Africa's Benedict Parther spoke to some of the delegates to find out more about the commercial state of the industry and what this means for the continent. Let's take a look.
Regarded as one of the premier events on the industry's calendar, Africa Oil Week, held recently in Cape Town, brought together decision makers for discussions around the global oil and upstream sector.
Companies are focusing on costs and how they manage their costs, but they're also focusing on the long term. So continuing to spend on exploration and looking at the potential in Africa for further exploration is certainly what some of the existing companies are doing.
All this in an attempt to meet industry demands despite oil price volatility.
Africa is a frontier for oil and gas exploration, and companies continue to assess Africa from an oil and gas perspective. And also Africa is a significant market that is developing for energy. And now Africa will not only be looking to just export oil and gas, it will also be looking at consuming oil and gas domestically. So just to give you an idea, from a South African perspective, we export $30 billion roughly of commodities from mining, and we spend about $20 billion importing energy in terms of oil and refined products. So it's a significant amount that we spend on energy.
Both governments and industry continue to see potential in and around the continent and have used this platform to network with various stakeholders and possibly increase investment.
Certainly East Africa is our priority region right now, where we're looking at opportunities in Tanzania, Mozambique and Kenya. In South Africa, we've also had some interesting discussions around shale gas development as well. And we think that there's some expertise that at least Canada could contribute to the discussion. At the same time, there's lots of opportunities in the marginal fields in Nigeria, and we seem to have a number of interested Canadians to play a part in that. At the same time, Nigerians also asking Canada for technical support.
I think the message that you get when you speak to people, specifically from an African context, is that Africa is full of opportunities, and that when we look into the next few years, that will bring a lot of benefits and a lot of growth to the continent. Certainly the people that we have spoken to are all optimistic about the developments that we want to establish within the South African port system, and I think it's just probably a matter of time before the economic situation starts turning, and then we will see much more investment and much more drilling and exploration along the coasts again.
Overcoming industry challenges such as increasing transparency and environmental regulation remains crucial within the sector, as well as commercial and organizational reform.
The biggest challenge in the market at the moment is for the junior companies that are smaller, that are focused on individual licenses and that are involved in exploration and production. It's much more difficult to raise capital for them at the moment. But for the bigger projects, those that are significant, there continues to be interest to look at investing, because those are long-term projects that look at multi-year time frames, 10 or 20 years. And with those projects, the interest continues.
Joining me now to discuss the investment case for the Africa oil and gas sector is in our Lagos studio, Edward Voelcker, partner in energy and natural resources at KPMG Nigeria. Edward, thanks so much for your time. Maybe let's just get around some of the headlines that we've seen. We've seen looked at falling commodity prices, increasing unemployment. These have just been some of the headlines that have been linked to the extractive sector. Has this shifted perception if you look at the oil and gas sector as an investment destination or priority for in the African continent?
I think we have to remember that people in the oil and gas business are very used to these cycles. In my career, I think this is my 4th down cycle. And while all of the things you mentioned are very disruptive to the countries affected by lower oil prices, they do happen, and the oil and gas investors know they happen and really try and plan to maximize their profitability and their investments in each country, knowing that cyclical upturns and downturns will occur.
But Edward, while we're in this particular downturn at the moment, there have been analysts that have said this presents an opportunity for governments to reshape their policies. So this, what may be seen as a resource curse, can in a way be a blessing. How do you envisage this would work?
I think that's exactly right. Wood Mackenzie has published many reports over the years pointing out that in general, sub-Saharan Africa does have higher economic takes, both in West Africa and potentially for new projects in East Africa, than the average around the globe. Some of that may be warranted because some of the fines are considerably larger than the average in the rest of the world. But at a time that sub-Saharan Africa wants to encourage investment, they must revisit some of their economic terms to make sure that new projects do come through the pipeline and do get sanctioned and invested in.
What are some of the big sticking points, just looking at a particular case study? So looking at Egypt in the beginning of the year, making certain reforms and being able to clinch as many as 15 deals when it comes to their exploration. What other points or other economies on the continent, what should they be learning? What should they be reshaping there?
Simply put, stakeholder engagement. That is always the key to getting the industry to work right. The governments cannot work in a silo just thinking about what they want. They have to have the investors at the table. They have to have landowners at the table. They have to have the people interested in local content development at the table. And they must work together to make sure that any proposals put forward to attract new investment make sense to all those stakeholder groups.
Well, you mentioned the issue of local content. We'd like to get to that in just a little bit, but seeing that obviously you are based there in Nigeria, there has been a lot of noise around the petroleum investment bill. It's said to have been gathering dust since 2008. What is the latest when it comes to that? Because apparently that has a lot of potential to unlock billions of US dollars if this is done right.
I completely agree with that. Obviously, Nigeria has some of the longest history in sub-Saharan Africa, having found oil in the early 1960s. And over the 50-year period, I think local content potentially could have moved a lot further than it sadly has. However, since the act was passed in 2010, there has been some very strong development of local contractors buying equipment from overseas, new workboats, new fabrication yards for assembling things, and there are now some very, very large projects that are being heavily built here or parts of them being made in the Far East but then floated to West Africa and assembled and fully installed here. So I think the news in general is quite good. Having said that, I think the Nigerian Content Development Board, which has taken a fair amount of money in from the contractors doing business here and the IOCs doing business here, needs to move forward in its efforts to be clear on its messages and what it's doing with all the money it's attracted from industry.
Edward, just another development that was reported on during the course of this week was a talk that the middleman would be cut out when it comes to services that are being rendered. Is this something that you've heard of, and what impact is this going to have on the industry as a whole?
Well, I certainly think the new presidential administration and the new ministers appointed have gotten off to a very strong start. Some have said it might have been a little bit slow, but the number of things that NMPC and the Ministry of Petroleum is involved with very quickly include things like you mentioned, 2 sets of contracts being revisited, the actual sale of Nigeria's share of the crude oil to third parties, and then the purchase of petroleum products that need to be sold here, petrol for cars and jet fuel and things, that as our refineries are not running as they should, we have a lot of imported products. As you pointed out, both of those historically have had lots of middlemen involved, and that NMPC and the ministry and the president have said has got to end, and they are implementing new regimes that will hopefully remove that leakage in the economy.
Obviously, Africa, if we talk about resources, we've heard the resource curse being used in the same sentence. And then there's also been said that we are not seeing the benefits of these fines trickling down to grassroots, to the citizens of these particular countries. Are we seeing host countries making a big enough push for the use of local content?
Well, I think that would depend. My answer would have to depend based on which stakeholder I was. Certainly some of the investors might say that local content is being pushed too far, increasing the costs of their capital investment, and then therefore maybe limiting the amount of investment they're willing to make. However, I'm sure people looking for employment or seeing a lot of imported goods come in through their ports would have the opposite view, that many of those goods should be assembled or built in country. There should be more employment. So it really harks back to how you seek agreement across that stakeholder body. I think there's no doubt that Nigeria is on a good track to improve Nigerian content. However, for the East Africa developments that may occur in Mozambique and Tanzania, they are starting, to be honest, from a lower history in oil and gas. So the local content issue is even harder than it is in Nigeria, which had this 50 years of history to work through.
When we get foreign companies coming, investing on the African continent, are we seeing the transfer of skills?
Oh, by and large, I certainly believe we are. In Nigeria now, the largest oil and gas company is actually Nigeria LNG. Nigeria LNG is the 4th largest producer of LNG in the world. Its top management is 100% Nigerian. I think somewhere north of 95% of their thousands of employees are Nigerian. It's a great success case of the history of the investors and the government coming together to come up with an independent joint venture, a new structure at the time when it started in the 1990s, and be very much a Nigerian company that is world-class in all possible ways.
We've got the lay of the land from a West African perspective. Do stay tuned. When we come back, we'll have more insights and we'll be bringing you a lot more coming through from the east of the continent. Stay with us. Welcome back. You're still watching Invest Africa. Before we continue our studio discussion, recently at the Africa Oil Week that took place in Cape Town in South Africa, CNBC Africa's Benedict Parther also spoke to some of the industry players about the current landscape.
I think Equatorial Guinea right now is a hotspot. Everybody is interested in investing in Equatorial Guinea, Gabon as well, East Africa, Mozambique, and Kenya and Nigeria as well. There's always new prospects there, and Angola. Yeah.
So Ellen, you spoke about the Zero Discharge Law. Just give us a brief overview on how your company, Freeburg, ties into that and what implications that means for the sector at the moment.
Okay, so Freeburg Oil and Gas, just to give you a little bit of an overview, we're a service provider. We provide services using technologies that are, number one, positive for the environment, and then number two, cut costs. So we actually, for us, it's a great time that it's not really bad for business that prices are low. It means that oil companies are looking at ways to cut costs. So we are looking at bringing in technology that is going to cut E&P costs. So the Zero Discharge Law pretty much states that zero hydrocarbon should be released into the atmosphere, into the ecosystem. And what this means is that oil companies just need to be a little bit more conscious with their waste treatment strategy. They cannot dispose of waste that has not been adequately treated enough to comply with the Zero Discharge Law. So in terms of waste treatment, Freeburg Oil and Gas has partnered with one of the biggest waste treatment technology manufacturers in the world, Nature Oil and Gas from Norway, because Norway has the most advanced technological oil and gas industry. So that particular product we are trying to launch in Africa. We are launching in Africa. We started out in Angola and we've spread to Ghana, Nigeria and Equatorial Guinea. So yeah, I think it's like I said, it's a bad time, but there's also opportunity in the fact that prices are low, especially for Africans to get into the industry.
So just in terms of the balance between raising the capital to work in this industry, as I know it's a very capital intensive industry, and the profits, are you managing to break even at the moment because of the drop in the oil price?
Well, there is a drop in oil price, but searching for oil will never stop. You can search for the oil with the marine seismic, and then you can explore these fields when the prices have gone up to the level what is expected to be, and that's how we can break even. But in India and in smaller countries in Africa, where these Norwegians and European countries are very expensive in their data acquisition, whereas we can throw a challenge to them in this smaller segment of seismic.
And then just lastly, moving forward, where are some of the areas you hope to capitalize in? Where are some of the opportunities you may have spotted within the service that you offer?
Yes, there is quite a lot of opportunity in the African continent, and there are many wishful countries who want to explore their own oil, because oil takes measure of their revenues in foreign exchange for purchase of oil. Now, every country in the continent is looking to become self-sufficient in oil and gas. So we see there is a lot of scope in Africa.
Still with us in our studios in Lagos is Edward Voelcker, partner in energy and natural resources at KPMG Nigeria. And now joining us from Nairobi, Kenya is Semelang'o, Chief Executive of PetroKenya Oil Company. Gentlemen, welcome once again. Go, let me start with you. We've heard there in the insert that the east of the continent has become somewhat of a priority area in terms of investment. Is this what you're also seeing on the ground?
Thank you very much. I think East Africa has potential. We discovered gas in both Tanzania and Mozambique. And by look of things, Tanzania is already producing liquefied natural gas and using it for its domestic consumption. But Mozambique is the most interesting one as well, because I think by 2025, it will be producing about 127 TCF, trillion cubic feet, and it will become the second largest exporter of liquefied natural gas. And there are prospects in oil and gas. I think Kenya now is open for competitive bidding of the oil blocks which are available. I think now we have about 10. And according to, of course, Tulo, we are now able to do averagely about over 300,000 barrels per day, and the Kenyan government and Ugandan government is in agreement that we need to do a joint investment that we'll be able to have a refinery ready by 2018. So I think there are good prospects in Kenya and Uganda and East Africa as a whole.
Edward, just before I come to you, I'd like to stay with you for a moment, Gore, because obviously we are looking at a lower oil price. We have had a lot of companies that have been battling in terms of cost containment. How are companies able to stay afloat there, and how do the technological advances now come to the aid of these companies?
During these tough times, the oil price is going down, and therefore there are limited resources in terms of return on investment. And most of the financiers are very hesitant to put in money given the low returns on investment. So, use of technology is very critical because then it reduces the cost of hiring more staff to be able to do some of the tasks. So technology is helping, and use of technology is definitely helping in terms of reducing cost and helping companies stay afloat, and also cost-cutting measures, given that we are not having very good economic, we are not enjoying very good economic times in Kenya, generally in East Africa.
Edward, let's come to you and get your insight when it comes to this. Obviously, we are seeing not only the fiscus coming under pressure, but those oil majors as well.
I think certainly in East Africa, the projects that need to be done in oil are very, very expensive. The pipeline that needs to be built from Uganda through Kenya to Lamu, or a potential other route through Tanzania, both need to be scrutinized, and that cost needs to be driven down absolutely as much as possible. But it's a very large and expensive and heated pipeline. So tying to your points about technology, trying to find the best technology for pipelines as well as the entire field development will be key to getting that oil produced, hopefully somewhere in the next 5 or 6 years.
Edward, let me stay with you before I go to Gore, who's obviously joining us from Nairobi. Do you think there is an unmanageable balance between the infrastructure that needs to be laid and the capital that you need to put forward regarding the revenues that a company will be able to see in the longer term?
No, I think both of the issues for the oil project in Uganda and Kenya and the large gas export projects for Tanzania and Mozambique, both can be handled by the partners involved. In both cases, you have some very, very large companies, Chinese, French, and sort of British-Irish companies involved. And in the case of Mozambique and Tanzania, again, you have large IOCs, international oil companies, who are used to this sort of investment risk, this sort of 5 to 10 year period of capital outlay before they have hopes of seeing revenue. And in the case of Mozambique, you have partners in those joint ventures from the high growth countries such as India and Thailand and China, of course. So those partners in Mozambique will be very interested to see the gas produced, and of course it may be sold to their countries if commercially viable and things. So I think all of the investors are used to this sort of risk, are used to downturns in oil and gas prices, and over time one hopes these projects are developed. The whole issue is the exact timing, which is still slightly uncertain.
Gore, would you agree with Edward on that point?
Yes, I agree with him. I mean, basically it is the setup cost, and like he said, it needs large investment for long term. I agree with him.
Just go in terms of, just before we close off this discussion, to understand how to do business on the African continent, and specifically being able to do business in such a trying time, being the extractive industry, what advice would you give to potential investors that are looking to come into this particular industry? What would you say to them that they need to understand?
They need to understand that there are always low moments in this business, and basically I sincerely believe this is basically geopolitics, the politics of the US and Russia, and that everything will come back to normal, and they need to have confidence to invest in East Africa and in Kenya, and they will be able to get the return on investment.
Well, thank you so much, gentlemen, for joining me. A big thank you to Edward Voelcker. He's a partner in energy and natural resources at KPMG Nigeria, and of course from the east of the continent, Semelang'o, Chief Executive at PetroKenya Oil Company. And of course, if you'd like to take this conversation further, do tweet us using the hashtag InvestAfrica. From myself and the Invest Africa team, it's goodbye.